doing well. You had a nice weekend. We still got Sunday to go, so I thought I'd just make a quick COT video, and so we can see how the banks and the big fish, how they're positioned for the week ahead. Although we have to be aware that the data is still from there. So really, what should happen is that we are looking at last Tuesday, but we're actually looking from the week prior. So we're still catching up, but this would be the last one now. And so when we got the data on Sunday next week, we'll then be looking at Tuesday the 28th. So we'll be catching up. It just takes a little bit of time in order to catch up. So we're currently looking at last Tuesday's date, which is fine because a couple of weeks ago we were looking at month-old data, and now we're only looking at 1 week old data. Then on Sunday, this time next week, we'll be looking at the last Tuesday. Okay, so that being said, you can see the dollar is quite stable and quite sideways from the week prior. So strong because we're positive. However, we had the Euro USD buy signal there, and more longs from the week prior. So 144, 139. So fairly substantial increase, not a huge increase, but is strongly positive and more positive than the week prior. So let's look at the yen. The yen was dumping a lot last week. So let's look at the yen. Yes, we ticked up. Now it's probably worth mentioning that the yen bubble on a monthly basis is strong. So the retail guys have shorted the yen since the beginning of the month. So that's of note. It's the strongest sentimental currency from the retail trader perspective, because they've really shorted it on a monthly basis. So this might be indicative of the move that we might see in April, especially if they're going to hold on. The retail traders, they're going to hold on to that bias. They're going to hold on to a short yen bias. If they do, then this might tick up, because obviously there has to be someone to counter the other side of the trade. Who counters that trade? It's the algos and the banks. So if the herd are short something, then they're going to see a reaction from that sentiment. So we might see an increase on the yen, I think, potentially, if we look at our bubbles. So we can take off Euro. We can look at Aussie, if that's done anything of note. Slight increase from the week prior, but we are negative still. So nothing to be said there. There's not much movement really to be really commenting on. Pound might be interesting. Slight decline on the pound. We're negative, and we are more negative than the week prior. Do note that we had like a head and shoulders pattern here, and we tried to breach the zero line here and failed. So that's like 4 attempts now of breaching the zero positive territory area, and it's failed. And we're more weak than we were the week prior, so more negative, shall I say. So that's the pound. And we got Bailey speaking tomorrow, so do be aware of that. He's going to want to be saying some stuff about the inflation, because we're still double-digit inflation here in the UK. So he's going to want to address that tomorrow. So it's going to be moving the pound quite a bit, I think. CAD, probably. Oh, wow. Okay, so that is interesting. It could be oil-related. Possibly oil-related. I think this is looking such a big move. It's probably fundamental based. Don't forget, this is the banks and the institutions. So that what they've done there is really interesting on the CAD. Huge drop. So you could look for CAD weakness going forward. We might get a CAD yen sell signal when those two cross. In fact, we will get a sell signal if they cross, but we have to wait for the cross, obviously. So there was back then. I thought the CAD might have overtaken the USD, but it clearly didn't, and we've fallen quite heavily since. Take CAD off. Look at gold quickly. Yeah, so that's what I would have imagined that would have been the case. This move was a bit long in the tooth. Is that we should have probably retraced a little bit, and we did get that retracement, and we're just probing higher. All-time highs possible. Especially if the Fed are going to sit on their hands at the next Fed meeting. There's a very likely probability that they're not going to hike. So that's probably going to aid gold and commodities, because they're weighted in USD. So this might be surging. I think potentially when we look at this chart next Sunday, we might see another increase. And don't forget, we are strongly positive, and an increase of that positive sentiment from the big fish. So that's of note. Do note this will be a resistance. You could probably argue, we had some resistance here, the support obviously, and that might come into play. So we have to keep an eye on that level, 172,000. Yeah, we've still got a little bit of distance away. That might be a resistance, possibly. Let's have a look. We'll have a look at it on Sunday. CAD, we've done CAD, Kiwi, and that it did break out, and then we've fallen since. That was going to be a potential NU, New Zealand dollar, US dollar buy signal, but we didn't get the crossover, and so it's a good job we waited. And so it's now fallen. We're back below zero. So we had like the sideways chop, breakout, and we're back in. So we're back within that really annoying chop. So this was actually quite positive on the New Zealand dollar, and then now they sold it again. So that is what it is, isn't it? There's much comment there. It's a shame we didn't get a crossover, because then we could have maybe had a trade opportunity, but we didn't have the crossover, so therefore no trade. If anything, it would be a New Zealand dollar USD sell because we didn't get the crossover. And then Swiss. And that's that. So sideways. And we're just consolidating, ranging for a long, long period of time. Remember, just a quick one, you can change your filter, your date filter. You can change your currency pairs. You can also look at all the charts and all the stuff that Christian's been doing for us. And we've got a really cool thing where we've got a chart page, if I can find it. All the stuff. You can look at hedge fund sentiment, net non-coms, the commercials here. So we can, he's done this for us. So we can see, we can see some trade setups forming on some of these crosses when we're getting the crossover. So there's the Euro USD, for example. That was the buy. So that's that. It might be useful. And this would be the non-coms. What we're looking for on our analysis is the net non-coms. So it's the same data, but it's just obviously taking some little bit of data off because it's the net non-coms. Okay, so just bear that in mind. So we look at the net non-coms. It gives us a cleaner look. But if you wanted to look at the non-coms, so the gross value, then that's the place to look at it. So it's all quite cool. And we've got a delta sheet as well, which is quite cool. Where are we? Let's go right. I'm used to Google Sheets. And then that's just the difference from the week prior. So that's probably going to be quite interesting if you want to see, the change over time and the delta from the differences from the week prior. So it's possibly they were, taking some profits because of the end of the month as well. And we have had a very crazy March because we had all that Fed meeting. We've got the banking crisis that's ongoing, and it's possibly just wrapping up before the month. And they're going to redistribute their wealth into their bias on that particular currency as well. So hopefully it helps. And don't forget, if you want to join us, you can go to patreon.com/QuasiDB. And then you just have to subscribe to the bulletin tier and above in order to get this tool, which is really, really amazing. And it's free for all QuasiDB customers. If you want to join us at a discount, it's a $5 a month, but you don't get access to the COT data and there's no access to Discord. But you do get access to the daily videos. In themselves are really good because you get trade setups every single day. And that's it. So trade safely, and I'll speak to you guys tomorrow.